Hello everyone, so let's recap US30 on Monday the 4th of November. So on this day there was no real news. I haven't done a picture yet as it was only yesterday, but we're going to do today's price action and yesterday's. In this video we're going over yesterday, so Monday. This is the start of the week here. You can see we're in this reversal area, so what I'd be looking for is mainly for a bullish move up. You can see we got that today, but we're focusing on tomorrow, yesterday, and we'd be looking for that continuation towards the upside if we get a bullish setup. So we're going into to Monday the 4th of November with a bullish bias, just a loose one when I can get on the picture. So this is the day we're focusing on. We approach it with the same as always. Look at the previous day, 5-minute time frame. So previous day retested a sell area here, pushed down. This is non-farm payroll here, dragged that across. The New York opening was here. That's a buy level. So this area here would be a discount buy area, which you would drag across. This is obviously a premium sell because you've got a downwards move, but obviously you'd need more confirmation on that area. You got the mop here from the previous day that got used, so we're going to go over now and just focus on the session openings like we normally do. So going for the London session, you can see this price action here opened, retested the non-farm payroll level and got bullish support from there. So that's one confirmation of bullish movement. Price goes up, then we go into our setups, which are the mop, then we got the pre-London here, then we got the London open here. So this was a nice clean buy confirmation, and that is because we got a retest of the non-farm payroll. We saw bullish movement. We come to the pre-London, that's pushing down to a key level, which is either the daily opening, which is here, and you've also got the New York session here, and you've also got the pre-New York there, and that's all running along this area. So what we're looking for is if we start to see bullish pressure coming from the London opening, then we go ahead and take it. And you can see that's what we got from the London opening here. So that was a valid buy there. And that is impulsive. That would have been done where the London opening is taking place. So that's exactly on the London opening. That is there. So price pushes up. Retests the pre-London. Now you could have got into a sell there if you was favouring a continuation down. But looking at the overall structure of the price action, that's what you got to do. Look at the overall structure of the price action. Is it telling you, am I seeing more bullish confirmations or bearish confirmations? And at this time I was seeing more bullish, so all I took was the buy, got a retest, quick liquidity grab of this doji candle here, then a continuation up. So I stopped with only the buy. If you was looking for a sell, then this is a valid sell because it's retesting the pre-London and retesting the mop here. So this is the template of session opens, pushes up, retest them, and then you'd be looking for continuation down. So even if you took that here, price would have went down, you'd have moved to break even, and then you'd have been taken out at break even stop loss. So that is that. Price comes up, takes the liquidity from here, nice near double top. You've also got liquidity over here, and then this is not Friday's mop, it's Thursday's mop from there. So that is retesting that mop. So this to me isn't a big confirmation of a continuation down. So I probably wouldn't have took that. If I did see this, I would risk a smaller amount on this. I'd risk hardly anything. Same as always, wait for the reversal to start, stop loss at the high, and then get the downwards move. But like I say, it is not a great setup, so I wouldn't have taken that sell. I would have only took these two positions here, preferably this London opening buy because it has more confirmations. So in reality, I only took this buy from here, and that is the London opening. Now we move on to the New York. You have the pre-New York here. You have the high volume time running along there with the mop, and then you have the New York opening here. So you can see, nice template followed, price pushed down, took liquidity, retest up, retested the opening price, and then saw a continuation down from there. So these are all places you would just look to take a buy or sell depending on the template you're following. So the reason you get a buy from here is because the session opens, price pushes down, takes the Asian session low. Asian session low is a key liquidity pool. Nice amount of liquidity below that. That's a buy, and by the time you get to the New York opening, you would have took partial profits and your stop loss would have been at break even. Same trade management being done at every trade setup. Now once you see resistance here, you start to see that bearish pressure kicking in, preferably here, because that is your impulse move down, that is your retest of support and resistance, and then you'd be looking for a continuation down. So you could have got in early up here if you wanted, if you was eager, but the best entry would be on the break here. So you enter on the big red candles as it breaks, probably down here somewhere, or on this retest of the green candle, which is this one here. As you can see, it's retest support and resistance, and that's how US30 normally works. So that is a bearish confirmation, and then that would be a sell from there. As always, goes into profit, and that is taking this orange line, which is, if you go to the other chart, you can see that is the previous weekly low. So this is a major liquidity pool taken at the start of the week. So this is a key reversal area. So going back to the smaller time frame, this move here, once it takes that liquidity pool and you start to see resistance kicking in, that is a major buy confirmation, and you are expecting big volume from this area. So when it takes that liquidity pool, the job is been done here. So that's why you got an impulse move up. So this is a clear buy signal. Price goes up, support and resistance, then we go sideways. So there's no real sell pressure going into the market. It's just impulse move up. So this could be a big order going into the market, then go sideways. So this going into the next day, this becomes your discount buy. As you can see here, I've dragged it over, and this would be a potential premium sell area because you've got that from the New York opening. So this is the strongest one in my opinion because it's taken a bigger liquidity pool, and this is just one to look out for. So overall, London session, you got a clear buy from here. So this would have been profit, break even hit on the sell if you took it. If not, you got a sell from up here, but that would have been smaller risk because it's only retesting the previous day's mop, and you wouldn't have took any other trades there. Going into the New York session, you took a clear buy from here, small profit all the way back to the New York open. You see resistance, bearish pressure kicking in. That results in, you might have got stopped out. Let's say you got stopped out at break even here. Then you took profit on both of the sales all the way down to this major liquidity pool. Then you got a clear buy from there to the upside, which you would still be in going into the next day. Up here, as it hits support and resistance, you take a small bit of profit. Overall, no failed attempts for the day. You're looking at the charts the same way. You're just focusing on those key times. On this day, there was no news events, so you're only focusing on the London session and the New York session. Yeah, take care. Message me if you've got any questions. Links in the video description. Nice, easy day.